Thank you for tuning in to another edition of the Vulcan Report. Before you is an intraday chart of the silver futures. As you can see, since our last week's video, the market is attempting to power up. The initial target that we have is last week's high of 1458. Market, if we can get a close above 1458 this week, that will set us up for the next breakout target of 1488, which should bring us closer to the long-term trend line right here of $15.43 before hitting the bottom of the Kumo cloud, where there is very strong resistance. However, it's looking good right now for the silver. You can see currently we're hitting the overbought targets right now. However, if we can lock in to a bullish momentum and pick up in the buying volume, that should give us the velocity to push beyond the bottom of the cloud and get us well into the cloud. So I do see a continued push here in the silver by Friday, and that should be a great setup. So we'll keep our eye on that. All right, let's take a look at the next chart. Okay, taking a look now at the gold chart. As you can see right now, we're at $11.29. I'm sorry, $1,129.30. Market has been successful in pushing beyond the initial weekly resistance of 1129.50, and we're making a race toward the upper trend line resistance target of 1142.10. Same scenario as the silver. We should gain more velocity and buying volume if it picks up here. It's pretty abysmal right now, even though that's why we're moving slowly higher. But once that picks up, we should push beyond the Kumo cloud here and test the upper $1,200 mark. Get it, punch through the $1,200 mark in the gold. So hopefully we'll see that by week's end as the stock market continues to get worse. Again, hitting the overbought part, but if we lock in, we should be good to go here. All right, let's take a look now at crude oil. As you can see, the market is coming back down to test the last reaction low of $27.57.5. That market is getting drastically worse, and we should have no problem punching through that 27.57 and head lower. Keep in mind right now we're in what is called the average traditional price for crude oil. Crude oil maintained an average price between $25 and $30 a barrel, and it did that for a very long time, for decades, until geopolitical situations changed all of that, market manipulation and so forth, and now we have a situation where prices are out of control through external and internal market forces. Therefore, the price can go anywhere, and they can do it without any reason. They can make up a story to explain why it goes the way it goes. But right now, it's weak, and I expect prices to continue to go lower before they go higher. I just don't see anything in the way to cause the market to go higher, barring World War III and IV. That would be the only thing to make prices go higher at this point. It's a locked-in bear market, and it could still go much lower. We could go down to $5 a barrel. Really, there's nothing stopping it from doing $5 a barrel at this point. Just like when I made the silver video going back to 2011, when I called the top of silver, I warned everyone back then that prices could go down to about $8 an ounce, and we got pretty close to that. We got real close to that, and now the market's trying to bottom itself out before it heads higher again. We can still hit that $8 before going higher in the silver. So like silver, this oil market here could do the same thing. We could easily drop below that $25 a barrel, which would really really be a red alert signal in this market as it drops below the traditional price range of $25 to $30 a barrel. So we'll see where that goes. But right now, the initial target for the week is 27.57 and a half. If we can take that out, then we should lock in the next leg down, which could be several dollars down. It could drop well below that $20 a barrel. So that's just FYI there. Okay, let's take a look now at the US dollar index. Market's been bouncing off the long-term trend line support here and getting weaker. We still haven't been able to take out the last two reaction highs. Going par. Every time the dollar hits par, it collapses back down again. It has not been able to sustain consecutive closes above par. Par being 100. Right now, the market is in jeopardy of closing below 98.43. If we close below 98.43, then this will put in a short-term top and send us quickly to test the $95.87 right here. All right, that's where we're at in jeopardy. That would put us well into the Kumo cloud, and we'll be in danger of dropping below the Kumo cloud. So red alert in the US dollar index. It is on watch right now. If we break below the 98.45, I'll say, let's just make it 98.45. We close below 98.45 this week, or even drop below it, we'll be in jeopardy here. All right, you don't want to see that. If you're a bull, you don't want to see that. That would be disastrous if that happens, because then as the dollar falls in price, commodities will rise in price. This is how you know a short-term bottom will be in place for commodities such as crude oil, such as soybeans and feeder cattle and live cattle. All right, so we'll watch the dollar. It's on notice.